Hi, Sam. Great to see you again. Just for our audience and subscribers, Sam McCarthy is the co-founder and director at Fresh Finance. Sam, I met many years ago when he was working at Macquarie Bank and working with a lot of law and accounting firms. So I'm really happy to be catching up with Sam today. And Sam, what have you been up to?
David, pleasure speaking with you and catching up. So been a really interesting period over COVID. I've been working at Macquarie Bank for the last 7 years, obviously in banking for 20 plus years, and during COVID, not a better time in the world to consider some change given the change we're all going through, and decided to start up a mortgage finance debt advisory business called Fresh Finance Group. So a fresh approach to finance and hopefully a fresh start for ourselves as well, with my co-founder, Paul Nelson, who also was from Macquarie Bank. So we're now looking to support people with their needs right across auto finance, their home loans and investment, and then also their practice needs in business. And there's so much crossover right across all of those requirements. And now not only do we offer one solution from one bank, but right across all of the major banks, the specialist banks, and if we need to engage the private banks as well.
What I've always found out about you, Sam, is you've got this amazing depth of knowledge in professional services firms, law firms, accounting firms, and you know how partnerships work, you know how the billings work, you know the ins and outs of those kind of things. So, I mean, basically, a lot of our subscribers are actually from law firms and legal tech companies as well, and suppliers. I guess, have you got any tips and hints for those folks who are looking at getting finance for their business?
Yeah, I think the first tip would be to not just look at rate as your driving force. A lot of people just get sidetracked with rates that are advertised on the net and media and what have you. It's not just about rate. Rate is a really important piece, but what you need to do is partner with financial advisors. It might be mortgage brokers like ourselves, and certainly with the banks. So I think it's all about finding the best partnership fit for your business and for you personally. And sometimes it might also be a fit where you split your personal and your business banking requirements as well. So I think first and foremost to me has always been relationship. And I think that's why we've been in contact for so long, David. And our business model is always about trust and relationships. So it's about finding those partnerships that are going to understand where you're at right at this period of time, and then where do you want to get over the next year and years ahead into the future, because you want to set those relationships up right at the beginning and not get so focused on the one thing which also drives many people, which is around rates and terms. You want it to be a long-term fit that's going to provide a solution for your growth.
I mean, it's interesting because you look at the business banking environment in Australia, and there's a lot of folks out there that can, and correct me if I'm wrong, that do look at the bricks and mortar side of things as being a key requirement. I mean, is that changing much? Are people more looking at the actual business and profitability and cash flow of the business?
Yeah, absolutely. It is changing in Australia, and there's so many more specialists playing in the space of goodwill or lending against the value of a business and a practice. So that really has changed. If your practice is secured by bricks and mortar security and you're a practice of 2 and more partners, you should really be reviewing that to extract your properties out of it. Go and do something else with that property, either pay down your non-deductible debt, see your accountant or advisor around all of this, but then maybe look to do something with your other property investments. You can secure better rates based on bricks and mortar, but if you're looking for growth and you're looking to support your business as it grows by the goodwill of that business alone, there's a lot of options out there. There's some real specialised lenders that will just focus on the value that you've created within your business. So there's a lot of avenues and a lot of opportunities for goodwill and unsecured lending in the space.
And effectively, that part of what your role is you can actually help people find the very best solution from their finance needs from those lenders, right?
Absolutely, David. So our role is finding out what is your key driver and what are you looking to get out of a finance relationship. So absolutely, there's a number of options around providing unsecured lending, and that's what we do. We go through and we understand the story. I think the story of your business and where you have been and where you're going is probably key and fundamental, and Unfortunately, a lot of lenders have probably lost the art of understanding the story of people's position and where they want to go and where they want to be. So being in finance for 20 years plus, I think that's probably the most important thing, is that relationship and understanding people's story and vision. We're able to then convert that into bank speak, if you like, and so that the bankers understand where the client wants to be and where they're going. Sometimes being almost an interpreter and advocate for our clients is really important, and how that's being presented to the banks. Sometimes when you're going directly, it's a little bit challenging and difficult to make sure that your message is coming through clearly, and then some of the changes that might have been happening through COVID period are being understood. So that's where we come to the fore, because we know what the banks are looking for, and we're making sure that we get the right fit for everyone.
Yeah, brilliant. And have you, I mean, how small, I guess, an organisation or a business would you actually work with?
We're supporting business owners all the way from when they've just got a few runs on the board. They might only be 6 months into their business, right through to really established firms that might have been in business for 100 years plus and have multiple partners. That's the beauty of what we're doing at the moment. It's very much around relationship and trust. So we don't get so tied up on a minimum size loan.
Okay, that's brilliant. That's great. So, I mean, there's folks actually out there, I'm sure, that are in larger firms that might be looking and saying to themselves, look, there's probably opportunities to actually like break out and do our own thing. They've got some relationships already. Perhaps they might actually have a vision of what they want to do. And I guess you might be a person that they can go and talk to in terms of what they want to do and understand where they can go from point of view of getting finance as well.
Absolutely. Always happy to have a chat. Probably no better time, given that people are used to using technology these days, and the barriers to entry and starting up your own practice. If you've got the right experience and the right network, it's probably never been an easier time to go and do that. But having said that, there's obviously more and more consolidation going on in the market as well. So it's a really interesting marketplace at the moment.
Do you think firms are going to be needing to look at finance from a standpoint of actually making investments from technology standpoint in terms of what's going on with potential, and I say potential vaccine passports, new compliance that might be required and things like that? So is that something that they should be thinking about from point of view of, have they got the funds? Have they got a war chest or money put aside for those kind of areas?
I think it's a good point, David. Having access to funding for acquisition of, whether that be growth, another firm, whether that be improvement and upgrade to technology, or looking forward to seeing what you need within your business, because businesses are becoming more and more diversified. So they're having to look to the future, and having that availability of cash to be able to support growth. It's almost becoming an expectation that within practices of all size, that technology is key to driving everything that we're doing. So if we're not considering that within our businesses and our practices, we definitely should be. And why not unlock some equity that might be in the business to be able to support that if it's not readily available within your cash reserves.
Brilliant. And one last sort of question, I guess. Have you got a story, like a really great story you can tell us about how you actually work with somebody to get the finance they needed to build their business?
Yeah, absolutely. So I think some of the best stories are ones that eventuated over a period of time, but we've worked with a number of practitioners. A great practice where we started, where there were only 2 partner firm, and all they needed to do to start out with was a little bit of working capital to get them going, and we got them going through that initial phase. That might have only been $300,000-$400,000 of working capital to get them started. And over a very quick period of time, over 12, 18 months, they saw some other firms and had some additional people that wanted to join that firm. So they started obviously having some partners that wanted to buy in. So there was some buying capital there. There was also some acquisition of other small firms that they wanted to make as well. So their business quickly expanded from 2 partners up to 5, 6, helped them with their acquisition there of the additional firm. And then they're also looking at purchasing the premises that they worked out of. Interesting times to wonder how effective working out of premises might be at the moment, but you're better off owning your own than paying rent to someone else. Looking at commercial property funding along the way there as well. So from a very small, humble beginning, they're now a multi-practice firm that has exponentially grown their revenue and their ability to service their clients across a number of streams of service. So really great success story. And then they're now looking at bringing through a couple of the junior members in their team through to partnership as the years progress.
Yeah, like I say, I mean, the fact that you know the industry so well, you know how things work, you've got such a rich network of contacts, and you're very generous with your introductions and knowledge sharing and things. Sam, really looking forward to actually catch up in the future. For more information, how can people get hold of you?
Look, best way to get hold of me is probably look me up on LinkedIn, Sam McCarthy at Fresh Finance Group. And my number's 0417 518 724, or the email is sam@freshfinancegroup.com.au. But really appreciate the time, David. Good catching up with you.
Always. Thanks, Sam.